in partnership with CommSec.
Joining us from CommSec is Tom Piotrowski. Good morning to you, Tom. Gee, I know this is probably not a big focus for you, but did you see Bitcoin overnight? It got over 90,000 US dollars. It's absolutely insane.
Kenny, it's important. It's impossible to ignore what's going on in the cryptocurrency space because, again, it is a direct response from what we've seen as far as the US election is concerned in the last week. The move of money into cryptocurrencies is a reflection of Mr. Trump's outlook on this space, the prospects for re-regulation and all of that has created a move into this space, arguably out of gold. So that is a consideration as well. So you have seen gold prices decline quite substantially over the course of the last week. They were down by another 0.5% last night. You've got them. You've got the spot gold price trading around 25.83. It was only a couple of weeks ago that every day you were seeing new record highs being struck by the yellow metal. But now you've got the US dollar surging, and that's making a casualty of commodity prices in general, of which gold is one of those. But as far as the broader stock picture is concerned, you've got one where stocks are consolidating around record highs. They took a bump yesterday. They've tried to recover tonight, but without much success. Overnight, you've seen the S&P 500 improve by around 0.2%. We've still got a little over an hour remaining in the session. Technology stocks remain in the doldrums. You've got the Nasdaq down by around 0.2%, but I hasten to add, you're still seeing these markets at elevated levels. What came out last night that was important was the latest CPI report for the month of October. It was in line with the market's expectations. There is still an 85% chance of a rate cut in the eyes of the market in December, thanks to these numbers. So that's important. But what you're seeing is a marked difference between long and short-term interest rates. So short-term interest rates are falling because of that outlook for what the Fed might do. Long-term interest rates, Kenny, are rising because of the prospect of Donald Trump's policies, which could add to inflation. And that's part of the reason why you're seeing technology stocks being hampered by that move higher when it comes to long-term interest rates. As I said, the ASX 200 expected to kick off with a gain of about 1/3% this morning. So that's in the context of yesterday's 0.75% decline. Important employment numbers today, which will have us all trained to the screens at 11:30.
Thank you, Tom. Talk soon.